All right, today we're putting Abans Holdings Limited under the microscope. We're going to give it a full financial health checkup to see what's really going on with the company. Let's dive right in. So, when you look at any company, really, it all boils down to one simple question. Is it healthy? Is it in good shape? Or are there some warning signs we need to pay attention to? We're about to check the financial pulse of Abans Holdings to find out.
And whoa, right out of the gate, the first thing we see is this. That's a loss. A net loss of over 82 lakh rupees for the quarter ending September 30th, 2024. Seeing a number in the red like that, it definitely makes you stop and ask, what's going on here?
Okay, so to figure out what this big red number really means, we've got to dig a little deeper into the company's profitability. A single bad quarter can happen, right? So let's see if this is a blip on the radar or part of a bigger trend.
And wow, check this out. It really is a tale of two quarters. Back in March 2023, Abans Holdings was in the black, booking a profit of over 86 lakhs. Fast forward to September 2024, and boom, they've swung all the way to a loss of over 82 lakhs. That is a massive turnaround, and not in a good way. We need to find out why.
All right, time to play detective. To figure out what caused this swing from profit to loss, we're going to look at the usual suspects. It's almost always one of two things. Either money coming in has dropped or money going out has skyrocketed.
And this chart, well, it pretty much solves the mystery for us, doesn't it? Take a look. Total income for the quarter was about 11.3 million rupees, but total expenses? A whopping 22.7 million rupees. They spent almost double what they earned. There's our problem, clear as day. Expenses are completely out of control compared to income. So, that's the what. Now we need the why. It's one thing to say expenses are high, but which expenses? Where is all this cash actually going? Let's break it down. Okay, and this donut chart really narrows it down for us. I mean, look at that. A staggering 82% of all expenses fall under one single category, employee benefit expense. Everything else is just a tiny sliver of the pie. So this isn't some company-wide spending spree, it's one specific cost that has just exploded. And this table really puts that explosion into perspective. Get this, back in that profitable quarter in March 2023, this expense was zero. It didn't exist. Then, all of a sudden, it appears on the books and it's huge. We're talking 6.43 crore rupees in December 2023. Even though it's a bit lower this last quarter, it's clearly a massive, brand new cost that the company is now dealing with.
So we figured out what's causing the recent bleeding, right? But a company is more than just one bad quarter. A short-term issue doesn't automatically mean the whole structure is weak. So now we need to zoom out and check the company's foundation. And for that, we've got to look at the balance sheet. Now, before we jump into the numbers, let's just do a super quick refresher on what a balance sheet is all about. At its core, it's dead simple. It just compares what a company owns, its assets, versus what it owes to others, its liabilities. Own versus owe. That's it. And when we look at Abans Holdings' balance sheet, wow, this is a completely different story. What they own, their assets, is valued at around 12,882 lakhs. And what they owe, their liabilities, a tiny 13 lakhs. That is incredibly healthy. It means the company has almost no debt, giving it a really strong financial cushion to fall back on. Okay, so let's put it all together. Our financial health checkup is complete. We've seen the worrying symptoms, we've diagnosed the cause, and we've checked the patient's underlying strength. Time for the final prognosis. So here's the summary, the final report from our checkup. The symptom? A pretty surprising net loss of over 82 lakhs. The diagnosis? We've traced that loss directly to a massive and very recent surge in employee benefit expenses. But the good news, the company's foundation is rock solid with a balance sheet that's remarkably strong and carries very little debt. And that really brings us to the big forward-looking question, doesn't it? You've got a company with a super strong foundation, great bones, you could say, but it's suddenly dealing with these huge new costs that are eating into its profits. So what's next? The real test for Abans Holdings will be how they handle this new reality. That's the story to watch from here on out.